This is Edco G Payslip question 16, part B. Caroline McCabe works in the Research and Development Department of Abbott, Ireland. Read the information provided below about Caroline's tax liability. So, gross salary is 58,000. Her standard rate cut-off point is 33,000. Her standard tax rate is 20%. The higher tax rate is 40%, and the tax credits she's allowed is 3,300. Calculate Caroline's annual take-home pay after tax, but before any other deductions. So, using the table below, we insert our figures into these grey areas, grey shaded areas. So, gross pay, which we know already, is 58,000. It tells us that up above. Then it goes on to the next part. So in the table, we have to work out what tax she pays at 20%. So because she earns 58,000, she's allowed a standard rate cut-off point of 33,000. So that means she's allowed to earn 33,800 at the standard tax rate of 20%. So it told us this up here. So to work out the taxes she pays at 20%, you multiply that together. I'll give you a minute to do that. And when you do, the answer is 6,760. And we insert that into the first table here, 6,760. So that's the tax she pays at 20%. So the tax she pays at 40%, well, that's the remainder, okay, of the difference between her actual salary, which is 58,000, and the first cut-off point of 33,800. So when you subtract that away, you will find out what the remaining tax she is allowed to earn, and that's 24,200. So that 24,200, she's going to be taxed now at the higher tax rate of 40%. So the higher tax rate of 40%. So I'm going to give you a minute now to calculate that. And when you do, this works out as 9,680. Okay? And we'll write it in here, 9,680. So of her tax, she has paid tax at 20% and then the remaining balance at 40%. So her gross tax is when you add the two of those figures together. I'll give you a minute to do that. And when you do, her total tax is 16,440. So again, we're putting it here, her total tax, and that's 16,440. The last piece of information tells us about tax credits. So she's allowed to earn 3,300. So like any tax credit, it's deducted away, and as it has here, less tax credits of 3,300. And when you subtract that away, you'll get a net tax. And I'll give you a minute to do that. And that's 13,140. And I will put this also into my box, 13,140. So this is the tax now payable, which she's going to pay. To work out the last part, our net pay, we will get that by saying her gross pay, take away her tax payable, or her net tax as is written in the table here. Her gross pay, as we know, is 58,000. We had this already. Take away her tax payable, or her net tax, which is 13,140, and I'll give you a minute to calculate that. And when you do, it should be 44,860. So she can earn now, after her tax, 44,860, and this is the amount that she has before any deductions are taken away, any further deductions are taken away.